The government has cleared proposals to acquire 814 artillery guns worth 15,500 crore rupees. Bharat Forge will be one of the beneficiaries of this move. Baba Kalyani, the chairman and managing director of the company, joins us now on the phone line to talk about that. Mr. Kalyani, good morning and good to speak with you after a while. If you could just start off by telling us what kind of opportunity do you see, particularly from this proposal of 814 artillery guns?
Well, I think first of all, just to clarify, this is a great signal from our new defense minister to get industry to participate in the manufacture of defense hardware, which is what Prime Minister Modi's views have been. So this is the first major program that has now been put into what is well known as the Buy and Make India category, where an Indian company will be the lead and it can get technology from whoever it wants, and it needs to manufacture bulk of the products within India. So I look at this mainly as something that is mindset changing process. As far as the artillery, this particular project that is concerned, this has to go through a fairly elaborate process of RFPs, RFQs, selection of vendors, tryouts, and I think, I don't see the first gun coming out in anything less than 5-6 years.
Oh. Okay.
So, it's not like there is an order tomorrow and there is going to be manufacturing happening in 2 years' time. So, it's a long process, but much needed process. So, I think from an industry perspective, I am very pleased that the new defense minister, Mr. Parrikar, has taken a very quick decision in getting this process started.
Okay, a good beginning, but a long way off to fruition. Mr. Kalyani, you have been scouting for joint ventures to exactly service this kind of a trend. You already have a JV with an Israeli company. Are you looking at more JVs, and can you bring us up to speed on when we may hear about them?
Well, we have announced a couple of joint ventures in different spaces in the defense area, Elbit being one of them. We have a relationship with another Israeli company called Rafael. Then we are working with a Swedish company called SAP. We have a relationship with an American company called Mandus. So we have a couple of relationships. But our philosophy is that we want to leverage largely our manufacturing base. So we want to make everything ourselves here. We will create new facilities to build this. We have already built artillery guns in the last 2-3 years. So, it's a good thing to see that the government at last is now getting this whole make and buy Indian category into practice.
You said you will create new facilities and you've already been doing that. How much has your capex been so far, and will you be putting in more money for expansion?
We have had very limited capex so far, but as I have said earlier, we will start our new capex cycle somewhere around end of this fiscal, which is, let's say, March, April of next year. And our targets are to double our top line by 2018, and therefore we will do some amount of capex for the next 3-4 years, somewhere in the region of maybe 300 crores a year, something like that.
Okay. And just to get a sense, because you have not given delivery of your maiden defense order to Safran just yet. That will start, I think, in FY16. Can you give us a sense of what kind of margins do these defense orders really bring for the company? What will the blended margins look like once you start getting these orders and they get factored into your revenue stream?
See, margins is related to the level of technology that you're going to use, and also related to whether that technology is yours or it's coming from outside. So if I'm able to build things with my own technology, which is pretty high technology, you get high margins. Otherwise, you're in the commodity side of the business.
Mr. Kalyani, at the moment, what percentage of your non-auto business is accounted for by defense?
Nothing.
Okay. And when do you think it will form, some substantial part? In a couple of years, you would have some substantial part coming in from armaments?
I think so. I think give it at least another 3 years.
Okay. And from the aerospace vertical particularly, when do you think the revenues will start to flow in? Will it be in FY16? And if yes, what would the trajectory look like?
Yeah, it will definitely be in FY16. Matter of fact, some of it will be in FY15 itself in the next few months.
Okay. And at that point?
We are targeting that, in 4 to 5 years' time to create $100 million revenue stream out of our aerospace activities. We have 4 customers today, and that's more than enough. All the 4 big customers are with us, and we are beginning to start supplying parts to these people.
So can you give us the names, post the Safran order? Which are the other orders that you...
Boeing, Rolls-Royce and Liebherr.
Rolls-Royce and?
Liebherr. Liebherr is a German company that makes landing gears.
Any other area of your non-automobile sector that you will look to scale up?
Actually, we will scale up all the 5 verticals that we have. Oil and gas is a vertical which is doing extremely well because of the shale gas fracking explosion in the U.S. And I think we are going to scale up the value chain out there. Construction and mining will be the new thing that will start happening once this mining activities get debottlenecked, and at least in let's say the Indian market, we start seeing some activity which hopefully will start towards the end of next year. And then of course you have railways, locomotives, which is I think going to be a big growth area for us around the world. We are already seeing a large amount of activity in North America. I think India will undergo a huge capex in railway and railway rolling stock. So, we are quite excited with these opportunities.
Okay. So, what kind of revenue size do you see of your consolidated balance sheet, say 3 years down the line or 5 years down the line?
4 years down the line, we will double our domestic revenue, India revenues.
Okay. Just one more word. You mentioned from the aerospace vertical, you're looking at $100 million revenues in the next 4 to 5 years. Can you give us any estimate of what the defense artillery segment could bring about for you in terms of revenues?
If I look at a larger horizon, like a 10-year picture, because I really can't, I don't see much happening in the next 2 to 3 years in this. There could be some smaller businesses that will come. But in terms of larger horizons, I think we will be on one of the large programs. Every large program is at least $3-4 billion worth and goes on for 15-20 years. So, it's exciting times seeing the policy change perspective that is being implemented by the government. This new announcement by the new defense minister. I think we are all quite excited and, trying to get geared up for all this.
So in this space, which is your biggest competitor in terms of, the bidding when it takes place? Which are the other companies that are generally in the fray?
Well, all the companies that are in the frame.
Okay. Well, just a word on the more immediate term, Mr. Kalyani. Are things turning in the ground in the domestic economy, either in your non-auto business or in the auto business?
Unfortunately not. Although there is, talk to anybody, there's a lot of optimism that things are going to get better. But, do we have new orders, additional orders coming out of the system yet? No. And I think we have to bear in mind that, the industrial cycle to turn around and get to the positive side in any economy takes time. We have been in too long a period in a negative cycle in our industrial economy.
So we have to turn the corner very soon, you think?
I suspect that, we're going to take pretty much all of next year before things start moving in that direction.
Right. That's the second industry watcher in 10 minutes telling us that even FY16 looks like a tepid year. Mr. Kalyani, it was a pleasure speaking with you on all those issues. Thank you very much for joining us.
Thank you.